Hi everybody, welcome to another update on the stock screener. Today we're going to look at our portfolio, our candy store, and give an update on that. Let's start with our largest holding, Soma Gold. So Soma Gold has retraced a bit, and I do know why this is, because there are delays, right? So they said that the mill move would be in Q4, and now it's Q1, probably in full production in Q2. So there is some delay, but yeah, it's just a few quarters. So nothing is going wrong here. We just have some delays. So that's why we have this guidance 4 times EBITDA that has been lowered for next year. That's 2024. And then we wait for 2025. So this line is added. So normally it was like this, but now it's like this. And we just wait a few quarters and then we will go back to this level. But it's still very high, right? This is the current market cap. This is the upside. So I'm not going to sell. The upside is still here. It's just a bit delayed. So we are going to wait for the Q3 earnings. Let's see how that goes. So here you can see the production forecast. So last year we had production forecasts for 2025, 46,000. Actually, it's not that bad. This is the newest forecast. It's 47,000. So it's actually better than the forecast last year. But yeah, they did say that they could do 47,000 next year, and now it's going back to 40,500 or higher. So there is some delay here that you can see in 2024, and that's because they are contemplating about moving the mill or not. We should have a decision on that soon. Now this is the NPV chart, updated with 40,000 and 47,000. It still looks very good. Okay, we have 6 times EV to free cash flow, and then going to 3 and 2. So I'm not going to sell at these levels. And we know that gold is going higher. And the leverage is still 6 times leverage to gold. So if gold goes to like 2,200, 2,300, there's still plenty of upside going for 2025. This is the 2024 line. So plenty of upside, at least a double, maybe even more. So I'm not going to sell, and it's still the largest holding. Next one, next largest holding is Trigon Metals. This one has been stable, went down a bit due to lower copper. I still don't like copper, but many analysts are saying that copper is going to go above $4 in the coming years. So you got that. And if copper goes above 4, then yeah, Trigon Metals will certainly go up if copper goes up, because it's a copper producer. It's already in production for the open pit. And this is the NPV flowchart. So open pit is done. Next year, in first half of 2024, we will see the underground in production going to 20 million pounds, and then growing to 35 million, and then 60 million. So a lot of growth, 10x growth. And in the latest presentation webinar, they said that there won't be dilution anymore, only issuance of debt, project debt for the working capital. So they can bring this in production by next year. There is no problem in doing that. Of course, execution risk, a lot can go wrong, but if they can do it, we are talking about at least 30 million in net income for next year, 30 million. And then that is going to go to 40 million the coming year. So net income plus capex is then 40 million. And then we are going to soar to almost 100 million in net income when in full production. But okay, that's a long way ahead. But even here, 30 million, 20 million net income, and your enterprise value is only 35 million. So that's almost 1 times net income. So it's very undervalued. We just need to wait for the execution. And copper is going higher, as you can see here. So this is still in the portfolio. Next one. Third largest holding is Mako Mining. Why did I buy this? They just had a news release. They reported 1,300 all-in sustaining costs for Q3. And that's a big deal. That's a big deal. Why is it a big deal? Because if you have 1,370 AISC for gold sold of 5,700, because in Q3 they had lower production, right? Then you can calculate the costs, which is this times this. Now, if the costs stay the same, and I think they should stay the same because tonnage is probably going to stay the same here. So I guess the costs will not rise that much. The only thing that rose are the recovery. And if recoveries go up, that doesn't change anything on the costs. The same with the grade. The grade is going up. That doesn't change anything on the cost. So I think the cost should be approximately the same. Q4 production estimates are 12,600, which is double the amount sold in Q3. You can see that here the gold production is soaring at Mako Mining, much higher than historically. So this is a turnaround story. And then you can calculate the all-in sustaining cost, which is this divided by the production, and it's 600 all-in cost. So they managed to cut the cost in half. This is a big deal. So on my MMY.V flowchart, I put 627 all-in cost with 50,000 production and growing to 75,000 at some point with expansion to 1,000 tons per day. And you can see here the cash flows. EV to free cash flow is 3 to 3.5. That's a very cheap company. Very cheap. And their balance sheet is pristine. no debt, or at least a few debt, but it's tiny compared to the cash flows. And not only do they have such low all-in costs, around 700, 600, they also have leverage to gold, which is very important for me. I want to have leverage to the gold price, and the leverage is 3 times. Based on these calculations, this production, and the costs and the market cap. So at 2000 gold right now, this has upside. This has at least a double upside to get to the 5 times net earnings, and more upside if gold goes up. As you can see here, there is 3 times leverage. So that is Mako Mining. And that's basically it. All the others have been deleted. So Hemisphere Energy is deleted. Already deleted it here because I saw that the Canadian oil price was really bad. Went from 10 differential to now it's probably above 20 differential. So very bad pricing for Canadian heavy oil. I can show you the chart. So let's go to Hemisphere Energy. As you can see here, there's no upside. I'm using oil price of 68 right now. And yeah, there's only downside right now because the oil price has gone down. The Western Canadian price, heavy oil price, has collapsed. Maybe if oil goes back up, then this chart will go back up. But I'm seeing more and more production from the Permian. Brazil and Guyana are also going to ramp up production. So I'm out of this trade. So Hemisphere Energy deleted. Monument Mining also deleted. I mean, it is a cheap company, but I still don't know the all-in sustaining costs. I'm just guessing around here. It could be 1,100, could be 1,200. I have no idea. So looking at these cash flows, yeah, it's not better than Mako Mining. So I sold it and bought Mako Mining because I'm trying to get the best of the best miners out there. And this one doesn't look better to me. We also don't know Murchison, what's the capex to build this. So yeah, I don't like this company too much because they don't communicate. They have no plans. So yeah, this one is sold for Mako Mining. And the last one, Goodfellow, is also sold. I'm not too bullish on the real estate right now. So yeah, I still like this company because of its balance sheet, a lot of inventory that they can sell, buybacks. It's not doing that bad, but I'm not sure that we should be in lumber right now and in real estate. Lumber is looking pretty weak. Real estate should also be weak. So yep, I just sold it. Not a bad company, but I like to be in gold at this time. We know that gold is going to soar, probably above 2000 to 2200, and I don't want to miss this move. Is lumber going to soar? I don't think so. So that's why I moved it over to these companies. Very small candy store, but very sweet candies. And I'll see you in the next video. Bye.